Hey folks, Dan Freer here, the Mortgage Update. Today is August 12th, 2020. So let's get on to it. What happened today? What's happening today? I'm doing this a little bit earlier because some news just broke and it's causing just a wild ride in the market right now. So the reason why I do these videos is to keep you guys informed. If you're a realtor or a loan officer, if you're a consumer, a home buyer, a homeowner, this is important to you. It basically gives you education on what's going on with mortgage rates. So if you're a realtor, you need to know what's going on. Your client might be able to purchase a little more of a home if you can get them a better rate. Or if you can see what's going on in the markets, you might be able to time it a little bit better. That's what we do here, and I hope that's why you're following me. Loan officers, this should be a very good training tool for you because most loan officers have no idea what causes mortgage rates to do anything. And it's crazy. I bet you probably 7 out of 10 don't even get it. And they're like, well, the 10-year treasury did this, and well, the Dow did that. None of that matters. It kind of matters. But what we want to focus on is what's called mortgage-backed securities. So I'm going to go over that in a second. We had some inflation numbers came out today, and they were hot. They were actually double what was expected. So let's get to it so I can show you basically what's going on in the market. Wild ride. And unfortunately, I kind of was right yesterday when I predicted some different numbers coming in. What I said yesterday is where we should be technically in a normal market is right in this range, right about here. So the question is that you might say, oh, Dan, yeah, it's easy to say that now because we had a pullback and now you're saying, well, here's where you should be. No, go back and watch my videos if you think I'm just coming up with that number. Let me explain all of this to you. So what we follow here on this channel is this number right here. It's what's happening to the mortgage-backed security bond, the price of that bond. As the price goes, red is down, green is up. When it comes in red, that's bad. Basically, that means rates went up. When it comes in green, that's good. It means rates are coming down. Red is our enemy. So that being said, let's just take it for that. Let's just make it as simple as we can. All right. So now these trend lines there's a line here. There's all lines all over the place. I'm going to pull out just a few of them. There's a line here and a line here. Okay. Think of this as the ceiling. This is the floor. So when rates, when things move, they're going to move like this. They should bounce between here or in the range. All right. However, these lines also mean stuff here. These lines throughout here. These are moving averages. So a 25-day moving average, a 50-day moving average, and a 100-day moving average. And if you blend all these numbers, you guys probably understand how averages work. So that's where these numbers are. So what I'm looking at is we should be basically trading between the 25 and the 50-day moving average, which would be right about in here. All right. When I came out yesterday, I said my concerns are this. We keep hitting the ceiling and stopping. Hit the ceiling and stopped. Hit the ceiling and went over, okay? That was a signal to me. And then we but we went over, but we ended the day at the ceiling. When I saw that take place, this is a certain chart that we follow as in economists. I'm not an economist, but I have a degree in economics, and this is what I do on a daily basis. So I'm just trying to make it easy for you to understand. So when this peaks up and then drops back down, this is called a head and shoulders. Basically, if I showed you other pieces of the chart, this is signaling me to say, you know what, we better lock or just be cautious. All right, so I basically put a lock order out to all my loan officers and said lock them if you got them. If you have a long time to wait, if they're building a home or you have 60, 90 days before you close, stay on the sidelines for those. But everything else pretty much lock. And then we hit the line again here. We hit the line again here. We hit it and exceeded it here, but closed the day under it. That is another telltale sign we've peaked. And then all of a sudden yesterday we crashed. And where are we? Today we're right in the range of exactly where I was saying we should be. But we're not in a normal market with the corona pandemic going on, the Fed stepping in, the government with all this relief funds and everything else. We really don't, we're in uncharted territories, but I like to play on the safe side. Would you rather me say, hey, I promised you a rate at 3 and I got you 2.75? Or would you rather me say, hey, I promised you 3, but I got you 3.5? I'm sure you would rather me give you better news than say your rate went up. So that's where we're following this, and that's why if you're with us, I can almost guarantee your rate is locked in. If you want to check it out, just shoot me an email or your loan officer just to validate that you are locked in. So that's what's going on in there right now. Some news that came in today was inflation. The inflation numbers were stronger than expected. However, treasuries and mortgage-backed securities have been pretty stable since those announcements. It's been juggling throughout the day, but it has stabilized. So let me give you some numbers we follow here. CPI numbers came out. This is a consumer price index. The number was up 0.6 month over month. That's double what was expected. And year over year, we were expecting 0.6 of an increase year over year. We're now double that at 1.2%. So that was cause for concern. The next piece of inflation is the core rate, and it extracts some data from that. Year over year, we were expecting to be at 1.2, and we're at 1.6. So that is the strong the strong inflation data that came in. So that's cause for concern. Rents, if you're a renter out there, the average rents went up over 3% year over year. So that's another reason why you might want to look at, getting into a home so you know what your costs are. This chart here, this is another thing that I follow and I post every day, is going through the technicals, and this is what I do for you. Basically, it's saying. Basically, what I say is the same thing. Here's the trend we've been going on, but this is actually treasuries, and a lot of the bonds usually follow each other, kind of in a similar pattern. It doesn't have to be that, but this was in the stock market piece of things. But this is the bond, the 10-year treasury. This is what's causing a lot of technicals in bonds for people to be a little concerned there as well. These are the trend lines. This is where we were trending, and then all of a sudden it was like, boom, we broke out. And that was like, whoa, what happened? And again, these lines are basically the same things I followed, the Fibonacci, the ceiling, the floor, and then the moving averages. So this is just another piece of data to show you a lot of these things that I'm following for you guys. So that's it for today. I am posting something special this evening in regards to special rates and programs. But if I can help you, if you'd like to check out more, speak with me personally, speak with one of my mortgage advisors to see what we can do for you. I'd love to be able to help you with that. The best way to get us is just give me a call at 844-775-LOAN. That's 844-775-5626. Or you can shoot me an email. My name is Dan Frio. So my email address is dfrio, F-R-I-O, @preferredrate.com. But if you would, visit us on the web at therateupdate.com, and there's all kind of tools you can apply now. You can get quick quotes. You can do all kind of things, whatever you want on here, but I'd love to help. So if your rate is over 3.5% and you want to think about refinancing or what it would do for you, just let me know. I'd love to help. So that being said, that is it for right now. I will be posting another video later this afternoon to go over with you some different programs that we're offering and some other things that might be surprising you. So God bless. Take care. Don't forget to give me a thumbs up. If you would, please subscribe down below. Hit the bell. I try to post, I try to give a title to all my videos that makes sense to you and they're easy to read. So if it's a video, it's a topic you want to see, go ahead and watch it. If not, skip it. No big deal. So take care. Hope to hear from you soon. Bye-bye.